Hello friends, in today's video we are going to talk about another depreciation method. This is VDB, and the variables used for in this formula VDB is cost, salvage value, life, start period, end period, and then the two optional variables are there, factor and no switch. So we will discuss it. This formula returns the depreciation of an asset for any period you specify. So by using this formula, I can work out the depreciation in between, let us say, third year to fifth year, second year to eighth year, like that. I can work it out. Then the component which are used, a brief explanation of those are there. So cost is the initial cost of the asset. Salvage is the residual value of the asset. Life is the period of the asset for which the depreciation is going to be charged. Start period is the start period of the asset for which you are going to calculate the depreciation. End period is the ending period for which you want to calculate the depreciation. Factor, the rate at which the balance decline. If the factor is omitted, it is assumed to be 2. That is a double declining balance method. So we will go by the default. And no switch, it is a logical value specifying whether to switch to straight line depreciation when depreciation is greater than the declining balance depreciation. So in case the depreciation is greater than the declining balance depreciation, we will have an option to choose switch to straight line depreciation. But we will not go for these default values, and let us try to work it out to VDB by using this formula. So we have taken a case, cost of machinery is taken as 2 lakhs, life of machinery is taken as 10%, salvage value is taken as 5,000. And we have already discussed the other methods of depreciation, SLN depreciation, that is straight line depreciation, then declining balance and double declining balance in my previous videos. So I request you to have a look at those videos to have a better understanding. Now let us work out the VDB. So go to the insert function. Select VDB, put the cost 2 lakhs, salvage value 5,000, life is 10 years. Now let me try to work out the depreciation for initial 2 years. So the start period will be 0, end period will be 2, from 0 to 2 years using the double declining method depreciation. And then I am leaving these two blanks. So for first 2 years, the depreciation charged can be charged at 72,000, which is nothing but the summation of these. Similarly, I can change it to end period. Let me make the end period to last. So if I make it, then for the entire 10 years, the depreciation charge is 1,95,000. If I change it to 7, then the depreciation charge for first 7 years will be 1,59,248. Now using this method, let us try to work out the depreciation for individual years. So F22, we have taken the initial start period as 0 and then the end period is 1. So this is 40,000 will be charged for the first year using the double declining method in VDB. Then let us freeze the cells which are going to remain stagnant. So cost of machinery, your life of machinery, your salvage value, 3 components are going to remain stagnant, and then the period is going to be variable. And then let us drag it. So on dragging it, we will get the depreciation. So hope this formula is clear to you. Thanks for watching my video.